My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome to Property Profits Podcast. I'm your co-host, Bryce Kaminsky, filling in for Dave Dubois. And if you've ever wondered how a family-run real estate business built an empire with private capital, mastering rentals, flips, and mortgage-backed notes, today my guest, Jay Redding from Fort Wayne, Indiana, shares the secrets behind his 20-year success, revealing unique strategies for raising capital, managing risk, and creating a thriving portfolio. Jay, welcome to the show. Thrilled to have you here.
Thank you, Bryce. I appreciate the opportunity and consider it a privilege to be able to be on the show. So thank you.
Yeah, we were talking before the show, a mutual acquaintance, Eddie Speed, and we're going to dig into the note game a little bit. But before we dive into that, let's talk a little bit about how you got started.
Sure. I got started, I did my first deal back in 2004. I was still in the corporate world at that period of time, and just got caught in some of the downsizing. I was in the pharmaceutical industry for 17 years and got caught in some of the downsizing that took place in tail end of 2006, and decided to go, let's go for it. So essentially I went for it in 2007, went full time, and haven't looked back.
Yeah, so define for the people listening at home, because everybody wants to be full-time, but what did full-time look like for you? Because you had the space, and I think that's really important when people make that decision. You had the time, because I guess you'd got a severance or something if they laid you off. So you had some runway to really get some momentum. But, define full-time and, what that kind of looked like on a day-to-day basis for people who are looking to leave the corporate world.
Sure. In my situation, my wife was a school teacher, all right, and we sat down. I can still vividly remember it. I was filling out an application for another pharmaceutical position, and I just came up and sat down with my wife, and I said, we need to talk. And I said, I'm doing this for the wrong reasons. My passion is in real estate. I'm just pursuing the job or these applications for the income. And she asked me, what do you want to do? And I said, I want to pursue the real estate. So what we basically did, we sat down, we cut back tremendously. All right. We lived on her income, and at that time we had 7 or 8 rentals, I think, at that point. And we basically lived on her income, and all the money that we got on the rentals and everything, we plowed it right back into the company. And I was finding deals, going out, finding private capital, people who I basically put a prospectus together as far as what we were doing on our flips. And we used the flips as the capital to be able to buy the rentals, and also do some long-term rentals with private capital, because, at that time I wasn't bankable from the bank standpoint. So I had to go and raise capital. So my time was basically spent finding deals. Now, I did not do the work. I did a little bit. We kind of do a little bit of the landscaping and stuff like that, but we have crews that did the work. So my time was spent essentially finding deals and finding capital. And that was basically the bulk of the time.
Well, don't forget finding people to do the work, because we always need people to do the work.
Well, that's true. Yeah. Fortunately, our contractors have been with us. All of them have been with us almost from inception, 10 plus years. So they know what we do. It's like I make a phone call. I act more as the general rather than swinging the hammer or anything like that. And I had a couple of realtors that were doing some, trying to, uncover deals, doing the preliminary work and seeing. So all I had to do was come in and take a walk through in the property and decide whether this is something that fit, and make a decision at that point.
Yeah, it's nice when you have a standard operating practice for the contractors where you can say, remember that house on 123 Fake Street? Like that. And you walk out and you come back, 6 to 8 weeks later, and the thing is roughly, they're never the same. but you
No,
put the same dress on her and you take her to the dance. So, um, with what you're doing now, we're going to talk. I want to say keep the notes on a separate page until we get
sure,
there, but
sure.
let's talk about, the secret sauce. You've been in the business now 20 years. Robert Kiyosaki calls it that unfair advantage. What is it that comes easy to you that other people might find difficult?
Well, what I would essentially say, you're going to learn the most on the first deal. Okay. I mean, you can read all the books, you can go to all the seminars and everything, but the bottom line is you have to take action.
Mm-hmm.
And just by taking action and learning, the ins and outs, there's nuances. Every deal is a little bit different, um, but you will start getting your stride fairly quickly. The second one will go smoother than the first, the third smoother. We've done over 100 flips now at this point in time. Every flip is a little different, and every flip always has a surprise. We just plan on it.
Mm.
Okay. We never know sometimes what that surprise is. All right. But we
Yeah.
just plan that it's part of the game, and you just learn to budget for those things, and you move through it. You don't get all bent out of shape or anything like that. It's just like, okay, this is the issue. How do we deal with it? How do we go through it, up, around, that type of situation, and get it done and keep moving? And that's what we do.
So you'd say it would be something like your mindset, like expecting the
Absolutely.
unexpected, and
Yeah.
just because there are some people who do get that wrench thrown in there and fold up like a lawn chair. But if it, I always call flipping the can of worms business. You're literally opening a can of worms, like, oh, let's take down this wall and find that there's a million things in this wall, and that was a bad idea. And
That's
maybe
right.
you end up just drywalling that wall again. You put it back up. You're like, we're not going in that direction. Maybe we could take this wall down instead. So, um, let's talk a little bit about what you're doing now, because
Sure.
you've got your rentals, your long-term holds, um, you've got your flipping business going, and there's this emerging trend that people need to be aware of, and that's the note business. So you've started to move towards the note business. You're opening that up as part of your portfolio then these days.
That is correct. We started doing notes here about 4 or 5 years ago. Is when we started really looking at it and getting some training in, our mutual acquaintance with Eddie Speed.
Mm-hmm.
I'm a product of his training program. All right,
Mm-hmm.
I have gone through the training program. It is excellent, um, and I feel very confident in what we've done. Yeah, it is expensive, but I will. It like anything, you get for what you pay for. Okay.
Mm-hmm.
And the
Mm-hmm.
bottom line is that in the first two deals that we did, we recouped our capital that we put in for the training program. All right.
There you
So,
go.
and we've been moving forward. Whenever you go, I mean, if there's a piece of advice that I can give anyone, is that when you go to a training program or decide to sign up or go to a boot camp or something like that, make a commitment that when you come back from that you implement what you learned. Do not waste time on that. Implement
Mm-hmm.
immediately while it's fresh on your mind. And that is something that I have lived by, religiously. All right. Whenever I go to any type of training, is that when I come back, all right, this is maybe a different deal. I've learned how to do this. Let's try and implement it immediately. So by acting and practicing, it gets ingrained in your mind. So now you have more arrows in your quiver for every deal that may come to you, so that you can be much more creative in
Mm-hmm.
getting the deal completed. Which, a lot of the fix and flippers and a lot of the wholesalers, I mean, they're a one trick pony, and they got to find the next trick, and
Mm-hmm.
that's not how we operate. All right. We find every deal that we uncover, and I really don't have a marketing budget. We essentially network for our deals, is what we
Mm-hmm.
find. And we are creative in how we do that because of the knowledge base that we've learned over the years of really attacking those types of situations. And we're constantly learning. I mean, I love learning from the guys who have been, for the people who have been in the business 20, 30 years because their reservoir of knowledge is just unbelievable. And that's lost a lot. And there's getting to be fewer and fewer of those people that's around. So when you have the opportunity, like with Eddie Speed, who's done this for 30 plus years, and the people that are with him, you're looking close to 100 years of experience with the people that are surrounded that he has around him. And it's like, man, I want to tap into that type of knowledge. All right. Because there's hardly anything that they haven't seen and that's your strength and that's your confidence that you can go to them. All right. And say, hey, this is what I'm dealing with. How should I handle it? And it's like, boom, it's done. You know how to do it. So
Yeah, and I like what you said there too about implementing it right away. And if I could add to that, I would say at least commit to doing that until you get your investment back. Like, don't, if you take a program on flipping houses, see it through until you've got
sure.
it at least evened out on your investment. Otherwise, it's like going to university or college for 6 years and becoming a barista or something. You have like
And not using it. Yeah. And
yeah,
not using it.
at least spend a year or two and try to recoup that 60 or $80,000 of education that you got
Sure.
from the college or university. So, with all that you've accomplished so far in real estate over the last 20 years, what would you say your biggest obstacle is now?
The market shifts all the time. I won't necessarily say it's an obstacle. You just have to be in a position to adapt when the market shifts. Real estate is like any other business cycle. Real estate goes through cycles. All right. And I now at the 20-year mark, I've seen a couple of those cycles. I've been able to weather those very effectively. We're in a position now, we've got 40 rentals. Our debt to our loans on those are very low. All right. We've
Hmm.
paid down a lot of debt. We're looking like about 23% loan to value. All
Wow,
right.
good for
Now,
you.
so we're in a position where we can transition. We still do flips, but we only do flips when it makes sense. We're not pushing the envelope. There's a certain margin we expect to make on a flip, and we just aren't going to do it unless it meets that margin. It's not worth the risk and time.
Yeah, to
For
do
us,
deals just to do deals, right? You
just
don't
to
want
do
to be in that
deals. Yeah,
business.
no, we're just not going to do that. And now we're looking at notes and doing more notes because the real estate cycle has shifted to be more of a note cycle
Hmm.
because lending has been from the traditional banks has become much tighter, much more restrictive. All right, interest rates are higher, and there's a lot of people who are out there who are very capable and very qualified to be able to own a home and make the
Hmm.
payments, but they're being left behind. And that's where seller financing and notes, that's where we fill that gap. We fill the gap of what the banks leave behind is what we do. I've got one right now where we are actually doing the seller financing. We've got 4 people who can put anywhere between 15 to 25,000 down on a property. It's 165,000. All right, so they're out there, okay.
Hmm.
But you have to market correctly and you have to work with things correctly to make it so it's a win-win for everyone that's involved, and that's how we like to work. Now, from the note side, we are now focusing much more on the notes and growing that portfolio out. And the reason being is that managing the notes is a heck of a lot easier than managing the rental
Yep.
properties. Okay, we can manage 10 notes for probably one rental. All right, for what it
Yeah.
takes for energy and everything from the rental. We feel that there's pluses and minuses on a rental as well as there's pluses and minuses on the notes, and we feel that there is a mixture of both that is advantageous. I may change as we get farther down the road as I get
Hmm.
older.
Hmm.
Okay, um, but our rentals cash flow exceedingly well. All right, because we have very low debt.
Hmm.
Um, but in this environment that we're in right now, if you're going to go out and buy a rental, it is very difficult to make it cash flow, or you're going to have to put in a ton of money to make it cash flow. And then that is going to, you got to start looking at what's your return on capital that you're putting in there. you can create much more cash flow out of a note. All right,
Mm-hmm.
just because you don't have those expenses that you would on a maintenance side, all right,
Yeah.
as you would on a rental. So, so we're buying both performing as well as non-performing notes. We're raising capital. We work with capital partners to be able to. It really depends on what the capital partner wants. Sometimes they want to be a little bit more active. Sometimes they want to be very passive. Sometimes they want kind of, I'll say, a little bit in the middle. They want to kind of put their toe in the water a little bit, but they don't.
Mm-hmm. Mm-hmm.
They don't want to really manage everything, but they want to have the resource there if that's the knowledge base for someone to bail them out if they get in trouble or what to do.
Mm-hmm.
So we kind of structure programs that fit that. Uh, Take the time to learn and listen to the investor and what they're wanting to try to accomplish, and then structure a program that fits for what they're wanting to do. And then we kind of go from there is what we do.
Yeah, and so in the note business or in the capital raising that you're doing now, how do you protect an investor who's trying to invest in that sort of business?
Oh, that's a great question. Okay. Whenever you're raising capital, regardless whether it's on the real estate side or the note side, the first thing that any investor wants to know as a I'll say a capital partner is that how are they protected? That's the
Yeah,
number
where's the
one thing.
security, right?
Where's the security? Exactly. And so you got to make sure that they're secured, all right, and showing that they are in that respect. And then there's other things that we do. So on the note side for us, I it kind of depends on which avenue. All right, we can go either if someone wants to be passive, we can hypothecate the note, which is nothing more than a fancy word of pledging the note. All right,
Mm-hmm.
as collateral for the loan that we're taking out from the private individual. Now,
Mm-hmm.
remember, with the notes, all right, that is backed by the real estate. So we don't own the real estate, but we have the legal right to collect the debt, and we have the
Mm-hmm.
legal right to foreclose on that real estate if the borrower does not pay. And
Mm-hmm.
so as a result, the equity that's in that real estate is our protection.
Yeah.
So we don't ever exceed 70% of what the value of the property is, and we allow for fluctuations that taking in the market. Um, we make sure that there's clean title. All right. We make sure that all the allonges and all of the assignments have been properly documented and recorded to make sure that we have the legal right to foreclose if need to. And
Mm-hmm.
then we have legal paperwork that puts it in place so that we actually maintain control. But if for some reason the borrower would stop paying, we have mechanisms in place that is spelled out as far as what we would do in this particular situation, etc. Okay. The bottom line is most of the time we're going to continue to pay the private capital partner. All right, during that period of time, we have enough reserves to be able to do that. But there, we do reserve the right to, based upon what the situation may be, that we may need to stop. But if we
Mm-hmm.
have to stop, you got to remember that doesn't mean that you're not earning interest. Your interest is still accruing. It will just get paid when we finish up the foreclosure, because those are all collectible amounts in the foreclosure process. So you'll get paid, but it may take a little longer till you get all that down the road. So
Yeah,
and we cover
I like
that.
the security against the property. That's one of my
Yeah,
favorite parts about the note is that,
yeah,
sometimes people raise like a promissory note and it'll be secured to nothing.
yeah. We don't do
But
that.
yeah, investing in the notes, essentially, as far as my limited understanding of it, is that as it's essentially like a mortgage note, and the bank,
Mhm.
you're the bank, and you're going to come for the house if you don't
That's
pay,
exactly right.
we're
We
coming for
do
the
play.
equity.
Yeah,
Yeah.
we do play the role of the bank. We become the bank. Is what we essentially are. We're the private bank at that point. Now, the other scenarios, if a lot of times we will purchase a note and we will sell out what's called a partial. And a partial is nothing more than a number of payments for a certain period of time at a certain interest rate. And for that type of situation, we will assign the ownership over to the private capital partner. They own that note during that period of time. Most of the time, they want us to manage it for them. So we'll essentially either provide a management agreement, or we will do a limited POA that if anything goes wrong, we'll continue to monitor it and look over it. But the nice thing with the partial is that they get paid, the capital partner gets paid before we get paid. Okay. They get the entire payment that comes in, and it all comes to them. Say it's a 5-year partial, a 60-month partial. For the next 60 months, they're going to get that monthly stream that comes in, and then it reverts back to us as our ownership. And we'll monitor that during that period of time. And then you kind of have the third scenario where someone wants to start becoming more active and own the notes themselves. All right, we find opportunities, and many times we will hold notes in our portfolio that we will end up selling off down the road, kind of what I'll say, quote unquote, a starter note for them to start getting their feet wet, that we've had in our portfolio for a period of time that's seasoned and is performing. And then we'll go ahead and sell that off to an investor that's wanting to get started in the note industry, or they're just looking to build out their portfolio. We have access to different resources of where we can procure those type of assets. And so that's basically the 3 avenues that we work through, is what we do.
So with the note business, it's much like real estate in that there's deals and there's money. When you're approaching what you're doing these days, are you find the note first and then the money to invest, or do you prefer to have the money lined up and then go looking for notes to pick up?
That's always the challenge I'll say in real estate as well as on the note side. You always got the balancing effect, all right? Deals, all right, and money, okay? Do you get the balance of both, okay? It kind of depends on the cycle. What we really like to do is, we talk with someone about being a private capital partner with us. We'll sit down with them, discuss what they're wanting to accomplish, so we kind of have an idea. Sometimes we've got something in our portfolio already that will work, and if that's the case, we'll move right away. We just extended. We're just in the process of extending our capital base, our line of credit, to be able to purchase small pools, all right, rather than one-offs. So we'll be able to hold a lot more capital and a lot more notes in our portfolio to be able to meet that need further. But the critical thing is getting to understand what the investor is wanting to do. We typically attract investors that want to play the long game. I mean, if you're looking to turn your money over and over like for a flip, that's really not our game. Okay. Now, sometimes we'll still utilize that money on a flip, but that's not on the note side. That's not really what we're looking at doing. We're looking for our avatar on the note side is they're looking for a good return, above average fixed rate return, without the volatility that's taking place in the stock market. So, what we pay was well above what you can get in a checking account or a savings account or even a CD. But we don't have nearly the risk that you're playing within the market, right, in that respect. So we kind of fit that middle road as a good, consistent, predictable return. All right. And quite honestly, I've told people, I said, if everything is going right, it's just going to be really boring. Okay.
Yeah. And
because
that's the exciting thing about it, is that it's boring.
It's boring. Okay. It's that check's going to come in every month. All right. And you're going to say, oh, great, it's here. All right. And that's it. But that's what many of our investors are looking for. They're looking for predictability, consistency, and to be well protected. All right. And that's what we do. That's what we provide in our own portfolio, as well as our private capital in that respect. So
Great. Now, if people want to find out more, connect with you, and learn more about what it is that you're doing, and
Sure.
possibly partner up with you there, what should they do? How do they reach you?
Yeah.
Where do they
All right.
find you?
All right. The very best way is just to, you can email us directly. You can go to our website at Cassidy, that's CASSIDY
Mm-hmm.
investments.com. And what I would encourage you is to sign up for our newsletter. We have a quarterly newsletter that really keeps your people abreast, our private capital base, of what we're doing in our portfolios and how we're doing it. And when there's opportunities, obviously those people get notified first. If you're looking to be a little bit more active and looking about getting involved with no investing rather than being a passive capital partner, then on the last Thursday of every month, we do a live Zoom call, and from 12 to 1 Eastern time, and we talk about all things notes is what we do. We allow time for you to ask questions. We want it to be about you, what you're wanting to learn, so we answer those questions. But we typically always have something that we're going to cover. Maybe it's a deal that we're working on, how we would evaluate it, those types of things, and both on performing as well as non-performing. So it's kind of a teaching tool, all right, in that respect, to help people get started. And so the easiest way is just shoot us an email at info@CassidyInvestments.com, and that'll come right into us. Or you can give us a call directly to our office at 260-440-7443. Either way, we'd be happy to talk with you.
There you go. We got the phone number, the direct line.
Yeah,
Yeah,
the direct line. There you go.
the No Business Jay is emerging, and I'm interested. I'm excited. And you're right. You don't want to be a one-trick pony in a changing economy in real estate. You got to pivot. You got to learn a few more moves, and survive the changing tides, and really come out stronger on the other side of this market adjustment that we're experiencing. Really appreciate your time, Jay.
Thank you so much, Bryce. I appreciate your time, appreciate the opportunity, and hopefully I've been able to bring a couple things that can be of value to your listeners in that respect. So thank you.
Definitely, definitely. And until next time, guys, we'll catch you on the next episode.
Take care.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.